Welcome to a new lecture, and this lecture is going to be on breakers and mitigation. Past lectures have honestly been pretty sloppy. I have kind of just been talking over showing you a demonstration on my trading view, and I believe that doesn't help get straight to the point. I did have a breaker and mitigation video like that, but I feel like going through a PowerPoint slide would allow to get my views across, and I hope you understand this in a more concise, precise manner. And I feel like after this presentation, you should have a good basic introductory and understanding of breaker and mitigation blocks, which are actually the same thing. Just for people who got that confused, a breaker is mitigation. It's the act of mitigation. So let's get into it. For our first slide, we have our selling level, anticipated reference point, and support level. This is just resistance. I don't know why I said selling, but we don't trade support and resistance. We just have narrative. If we have this as our bullish narrative, our bearish narrative trying to hit here, and this is our bullish narrative trying to hit here, these are points that you draw on your higher time frames. Anything over 15 or higher, these are going to be reference points here. When price draws down and hits your point, and then you see an explosionary reaction above it, we wait for price to retrace back down to the swing high in a bullish setup, and I'm going to explain. When price hits your level, the most recent swing high prior to this event here will most likely be traded back into following a retracement here. Once you have an explosionary move upwards, after that retracement, it just validates your trade entry furthermore. What that's going to look like drawn on your screen is this. This is our swing high. This is our zone. Trades back into this zone just to going after the selling level anticipated. So what a breaker block is the most recent swing high or swing low prior to a liquidity event and waiting for it to be traded back into. Some people view it as just a failed order block, right? Because if we were bearish, we wouldn't expect the price to go above here and go down. But if price ever displaces above this old high and shows a shift in price delivery, we're waiting for it to go back into here to trade back up. As for a bearish breaker, price trades and delivers into sell level, displaces lower below the previous low that took out this liquidity event, then retraces back into this level and sells off, going to either the buying reference point or to another liquidity target based on narrative. This is all just trying to teach you the basics, but there is narrative involved. This is what that would look like. Okay, so let's get into more nitty-gritty stuff. So a bearish breaker block is a bearish range in the most recent swing low prior to an old high being violated. Right here. Buyers who buy this low, just for it to be violated later, will be looking to mitigate this loss when price delivers back, and when price delivers back to the swing low, it is now in a selling program. So what is this? What does all this mean? So we have a swing high here. We create our swing low. This is our most recent swing low according to this event. When price trades into this, we raid the buy stops here. Now these people are trapped long. This is sell side liquidity. These are stops. Price distributes lower, creating a large displacement. This large displacement is in and of itself is typically large validation. And there are entries you can do within here. However, when price trades back into the swing low, it's now in a selling program. And I'm going to tell you why. Institutional order flow. When people see the swing low, they're anticipating longs, right? Because now stops have been rated here or here, and they're anticipating longs. However, you need to have a narrative. When price goes up and takes out this high, that doesn't mean anything. It just shows that liquidity has been taken here. When price displaces below this low, we now understand that price is repricing itself in a selling program. It's going to trade back up here to break even those trades that went long here, taking out liquidity as well subsequently. There's two types of algorithms within the marketplace. You have banks and institutions who trade algorithmically, right? This is a thing, you can look it up on Google. There are algorithms that trade the marketplace in the futures marketplace during New York Session Open and during all these things. There are algorithms that play. However, floor traders, like individual, like quant traders, do have their own algorithms that they use personally. Now, they still trade for Goldman Sachs and all those companies. However, they do have their own programs. And these programs, all of them, are going to try to break even their trades. And price tends to fulfill that promise and fulfill that wish. When price fulfills that wish, you know you're in a selling program because it's offloading the futures contracts here, and it's going to go back down. Now, this is a really strong model. I've been using this for a very, very long time. Once this event happens here, market structure has shifted, and any retracements will now be seen as new selling opportunities. If I have a selling reference point down here and price goes back up here, if it retraces into a zone, I'm now taking that as a selling opportunity, and I'm now trading it back down until it hits my reference point, and then I may shift my bias. Let's look at a bullish breaker. So I also realize don't mind these. This is just I tried to change my card color so it wasn't that noticeable, but I was doing this on TradingView. So bullish breaker block is a bullish range. I said range twice. In the most recent swing high prior to an old low being violated. Sellers who buy this high just for it to be violated will be looking to mitigate this loss. When price delivers back to the swing high, it is now in a buying program. Right here, we have liquidity, trades up, swing high. Most recent swing high, raids out this liquidity of the swing low, traps these people short. Now that these people are short, it's going to displace above this swing high. When we displace above the swing high, we're looking for price to drip back down into this level and go right back up. Same thing afterwards. Anything after this event, any retracements will be seen as new buying opportunities or longing opportunities. And this right here is a bullish breaker block setup. Now, a lot of people, again, I'm not the inventor of these concepts, but a lot of people have questions like, okay, isn't this just support and resistance flipping, right? Resistance taken out, now it becomes support, knacks up. I would say that this is one of the very, very few times that support and resistance or retail logic actually works within the marketplace. But we have to understand why it's doing that. We need to understand that it's doing it to mitigate the loss. It's doing this to mitigate the loss of people who went short here and it displaced right above it. That's the only reason why price does this. It's not doing because supply and resistance change. It's doing it to mitigate its narrative. Okay. So let's go into real chart examples. So prior to 9:30, now obviously I don't think my other examples have times on them, but I'll try to keep this understandable. This right here, a lot of people don't understand what this is, but this is an accumulation phase. We'll get into that later. But we raid buy side liquidity here. That's what this red block is supposed to show. We trade lower, displace. This is our most recent swing low. This is a 5-minute time frame, by the way, guys. This again, price is fractal. It works on any time frame. However, anything sub 5 minute, or 3 minute may work. Anything sub 3 minute truly isn't going to hold that much power or narrative because it's just a very weak time frame. Trades right back into this breaker and sells off. Now I cropped this photo. It's not the best, but you can go to Wednesday, the 7th of May, 2025, and you'll see at this exact time, this does put price into a selling algorithm. And it does trade into this block here, the breaker block. But that's another lecture. So how do I know where exactly it's going to go? Like the breaker is nice, right? I took the body of this closed candle. So I treat it like an order block. It trades back in. But how do I know, is this enough? Is it enough to just have this swing low? Can I take any trade like this? Is this any trade I can take? And my answer for that would be no. This is not something you do all the time. However, the next slide, we're going to build our confluences on one another. See? With this next photo, you see a lot more. You understand a lot more of what's going on here. Price swings high and displaces lower. What does it do when it displaces lower? It creates imbalances. Now we have an imbalance here. Why don't we take this? Oh, it's not aligned with our breaker. This red box represents our breaker right here. This is the imbalance that is in the breaker. And what is this? Right here. Displacement between the two. Displacement between the two candle bodies. This is a volume imbalance. If I take all these boxes, where does it line up? Right here. It's hard to see. But this different shade yellow, this third yellow color right here, this is your entry point. You take that entry here. You set your stop loss right here. If you want to be like daring or you're swing trading for the entire day, you can put it above here. But here would be a safe spot right above candle number 1 of the imbalance. And now you take that trade right there. Instead of versus trading it right here, you get it here. A little better position there. Let's go on to a bullish breaker. Raids out, sell side, to displace upwards, and it does. Look at this rocket. Now, what does it do? This is the most recent swing high. This is small. This is a small swing high, but it's 5 minute, right? So this is significant on like a 1 minute. This is our most recent swing high. We take the body of that candle, trade like a normal block, and we draw that line. That is now our entry. Now you're going to say, oh, well, this is practically perfect to the tick. Yes, but you don't just trade breaker blocks. And I'm going to show that within the next slide. Boom. We have our fair value gap right here. This breaker perfectly aligns with this fair value gap. We now take this as an entry, and price does deliver to the buy side now. This is how you enter off a breaker block. You use an imbalance as well. Preferably, I think that this is good. Even just a regular breaker and a fair value gap, if it is in alignment with your bias for the day, it's most likely going to work if you have, a decent stop loss. But this is how breaker and mitigation blocks work. Now, this is the last slide of the series, so I'm not going to press continue. But go into your chart for your homework and look for swing highs or the most recent swing highs and swing lows prior to a liquidity sweeping event. Wait for price to displace it through it, creating an imbalance, and wait for it to trade. You look at this. Even though it's expanded up, you'd get FOMO. I'm waiting for it to come back down. Wait for it to come back down into your entry point, and then hold it. And try to spot that happening at least 25 times. Now, I know on the Discord, if you guys even make it this far in the video, I mean, I wouldn't say I'm proud of you because you should be watching the entirety of these videos, but I know a lot of people aren't going to watch this. So if you are watching it to this point, this is good, and you should study this. And this should take you not long, but try to get at least 10 examples of this a day and do it for a week. And then this right here is actually going to be built into a model later. So try to understand this concept and try to find entries. And when you find an entry, log it. If you don't have a computer, journal it. But if you do have a computer, take screenshots, make a folder on your computer, and save it. Or you have Notion or you have Obsidian, save it, keep making it. And I would like to see posts of your breaker blocks and mitigation blocks on the Discord. If you don't post it, I'll know that you didn't fully watch the video. So, yeah. With that being said, I'm out, going to sleep, and I will see you guys in the next lecture series. Good night.